All right, good evening. Ken of Tortoise Capital, nightly strategy podcast for August 19th, 2020. Let's take a look at what we got. Right, we have recovered all the way to the peak of the Dragon's all-time gains today. Pretty amazing run. So we are at the Dragon peak all-time is also now the 10-day high and the 30-day high and the high of the day today. So it's 339.57 is the big story today. Our 10-day look-back period with the high at 339.57. The 10-day low today was at 331, so that's about a 3% range. Tomorrow, the 10-day low will have moved up to here till 6 days ago. So that range is getting a little more and more compressed on declining volatility. So it's almost rolling into a sideways quiet. And you can see the slope of the RL10 start to flatten out. The 30 is still strong. But now the RL10 and the Baby Dragon have basically come back and joined at 338.5. And today, actually, with a lower close, the first time in 5 days that we've had that lower close compared to the open, makes this feel like possibly a topping point, a 12 o'clock position. And when the RL10 has come back to the Baby Dragon, that's the first alert that we have that this summer may be coming fall as it drifts downward. So we're now getting a little bit closer to the PSAR and tomorrow's PSAR, which will be 333.94. Today's PSAR was about 332.8. So we still have a nice buffer, but it's getting a little tighter. Today we came back and made contact with the Dragon. We had a slight gap up, a tentative push higher to make that incremental new high, but then sold off most and closed in the bottom quarter of the range. So not a large range day, a little bit bigger than the last 3 days, but still less than an ATR. But the first time that it's closed weekly in the last 7 days. The last time there was a lower close was here, and then the market responded with a nice recovery run. This one, the gains have been more modest since then. In fact, it has basically been flat over the last 6 days, and it closed poorly. So this is starting to feel more like a pause that refreshes. So from the 10-day high, we are price now is at 337.25. We are at 0.66% below that 10-day high. So from the 10-day high down here, it's 0.66. It sold off today. We have the RL10 price here at 338.94. We have the RL90 and the top skin of the Dragon here at 337.25. Spine of the Dragon, lower skin of the Dragon at 335. The entire Dragon is out of the river with Z1 at 334.75. So it's hard for it to maintain that posture for much longer. So it's coming back to roost, if you will. The PSAR will advance one more day to 333.94. Tomorrow's 10-day low is going to be about 332 even. Today it was 331 even. The Bollinger Band mean, a significant distance below that at 327.5. The previous RL10 peak comes in at 326.53. So really, the distance from the previous RL10 peak to the current RL10 peak is about $16. No, $13. So about a 4% net gain from here all the way to the top. If below the Bollinger Band mean in the RL10, then there's really nothing until it gets down to a 5% sell-off, 322.49. So just for scale, if we were to see these normal profit preservation stops or backing and filling, this is a 0.66 from the 10-day high to today's close. This would be a 2.5% sell-off down to 331.09, which is basically at today's 10-day low. So that's what 2.5% looks like. And then this would be a 5% sell-off, all of which should be noise, but lately, the last few years, 5% sell-offs have been getting people's attention. And that would put it all the way back here into 15 and 20 days ago. So it feels to me like the 2.5% or the PSAR stop would be significant support levels in here. Okay. Still optimistic so far, but it just got a little bit weaker today. The case was really not there. I don't want to attribute it to the Democrats and the lack of any kind of policy provisions, but that would be too unkind. But it's now, we've already heard the best from the Democrats. I think tonight's the big night with Obama and Biden talking. And there won't be much said that moves the market. And then it gets into the silly season for the next 70 days. It's hard to see how we get decisive moves in that period of time, given the political uncertainty right now. And so shifting away from the market, we're more likely to see individual sectors and even better individual companies making their big runs. And that was kind of the case today. So let's take a look at what we got for today. So today we have the S&P give back a little bit at 0.4. We had diamonds were a little bit stronger, only losing minus 0.28. And then the Russell was the strongest of the U.S. indices today at basically flat at 0.01. Better than the market today was in terms of sectors that combine. Let's see, materials and healthcare lost only 0.29 and 0.33. Industrials lost 0.26. Tech and finance also in the red, but a fraction. Clean energy is continuing to pull ahead at 0.4. And then the big story stock today was really decisively good earnings in both Target and Lowe's home improvement. So this is a case where there are still some individual companies making their moves, like Target, Alcoa, Twitter, Nikola Motors. But even those are a little bit less than what we've been used to seeing lately. Apple up a fraction, but really not much news other than the retail sector today in Target. Target is going to be an interesting symbol to look at. So worse than the S&P for sectors and countries. Mexico minus 0.46. Consumer discretionary 4.7. Japan 5.53. Treasuries minus 0.63. I would have thought they'd have done better today as market starts to slow down a little bit here. In the tech space, the triple Qs were down minus 1.95. The broader triple tech sector down only 0.68. Oil exploration minus 0.69. Energy minus 1.15. Simon Property Group for the commercial real estate minus 2%. Brazil and silver gave back earlier gains to minus 2.7 and 3.8 respectively. So although it feels kind of like a quieter day, that's except for the story stocks there, that's kind of what it is. The range between the best and the worst is narrowing. Volume is lightening up a little bit. And again, it seems to be hunting for individual stories. So I want you to think about, while the market is starting to slow down here, the things that are really working tend to be narrowly focused companies that have some surprise story that deals with a favorable future or getting like big rewards. So like when Virgin Galactic got some money, bang, a lot of money found it fast. And the follow through was like a lightning round. And then Nikola Motors was like that. And then Kodak was like that, getting the federal money. Target is like that. So what I'm really seeing is that there's a lot of tactical money on the sideline just waiting to pounce on any kind of story stock that looks like it could endure, the next 6 months and have a longer term competitive advantage to the new reality. So we were transitioning from the old reality, and people are trying to reduce the uncertainty by finding those story stocks that should do well no matter which administration gets the nod at the election. So trying to find out who those new blue chips are likely to be for the modern economy post-election, post-COVID. Who are those kinds of guys that win? So if you think about the real estate or the retail space, Target has enough size and scope and brand identity that they can get the leverage of a global brand, whereas mom and pops can't really match them in terms of scale. They're a little more agile than Walmart. Maybe their margins and their clientele have a little more discretionary money, so their margins might be better. So Target is a company that you could see how that could transcend either a Democrat or a Republican. And as long as we're doing more catalog shopping and shipping from central warehouses, they should have a competitive advantage going forward. And maybe that, combined with their good earnings today, is the kind of news that suddenly attracts what was a 20% gain at one point during the day and ended up netting 12.5%. Still a really good move. But by the same token, that kind of exaggerated momentum can get shredded pretty quickly, as we've seen in Virgin Galactic and then also in Nikola Motors and in Kodak. So that when they lose the mandate of heaven, that momentum-based tactical trading disappears pretty quickly and goes the other way. So trying to figure out who those longer-term enduring plays are really is difficult. That's why I'm always on the lookout for stocks that look like Home Depot, I suppose Tesla, then NVIDIA, the chip maker for graphic CPUs. They're winning in the chip space, and no matter which administration wins or what the future holds, it's going to need CPUs, and NVIDIA is really the king on that right now. That also tells a story, I think, of Amazon, Apple, Microsoft, Google, these, Twitter and Facebook to that matter too. These are all guys that, regardless of administration, are going to be central players for the next 20 to 30 years anyway. So that may be the default blue chip now, is the tech leader who has tremendous margins, low cost of scaling, kind of independent of the business cycle, and then have huge cash reserves. So those are by default now essentially the new blue chips. So let's stay on the lookout for those kinds of opportunities that look like a decisive vote for a new future company, that kind of stuff. Target was the one today. Twitter is continuing to impress me. It was up 2.3% today, and its chart's looking pretty favorable. So on the daily chart, so the move in Twitter happened early and followed through pretty nicely on a swing trade basis. So Twitter has now emerged from its latest trading range. And has voted decisively to the upside. So I really think Twitter is on my short list for continued tech exploitation, and at $38 a share, $39, it's still a good price. And we can remember when this thing was down around 28, way back in here, when that supported spring crossing happens, and we've been enjoying the ride in Twitter pretty nicely. I will say the only, the cautionary tale here is that the size of this move is the size of the move that it's currently made. So if you go from the bottom of the dragon to the top of to the peak of the RL10, this is now basically the same move. Today was the first day of breaking out from that. So it's really got to get above 40 to be decisive. If it can get above 40 and stay above 40, then this will really be amazing. So that's kind of the line in the sand right now. I want to see it get through 40, the previous Z3 pinch. So tomorrow could be the day for that. So Twitter's on the list. While we're here, we'll just go ahead and look at Target. So somebody knew something about Target. There was a lot of accumulation from the period of the Z3 pinch. So you got this entire region in here in the Z3 pinch. The breakout happens, exceeds the Z3. Right here. Crosses the RL90, which is now rolling up. The river is rolling up. The PSAR is an unconditional gain. And then really a pretty nice move. And then today's earnings announcements just blows it out of the water. So this big gap up and go was certainly something that got my attention this morning. It was a big percent winner in the TC2000 screens. So I went to take a look at it. And let's get this showing in here. So that big move in the morning, alerted by the size of the gap, and still, a 7 or 8% move, even from the low of the day. So you might feel, it's gapped and it's too late. Well, there was still a considerable move, and I want you to notice how the gap, the sell-off, then recrossing the VWAP and going, And now when you see the RL10 bottom and go, that's about a hybrid frog right there at the red dot. And you get that's a move from about 150 to about 155. And that's still 3% inside here. And it held well above the VWAP all day. And this is one where we should be looking at the size of this box. So that box right there gives you the size of the noise box, which is about $1. There's no buying or selling pressure one way or the other. This is just this is at idle. So all it's doing is just cycling and waiting for the end of the day. So when we get in tomorrow's trade, a breakout from that box becomes the hybrid frog entry, and then you look for things like the low of the day here. This now becomes a key price level. So if 148 breaks, then the previous PSAR at 138, and then you could even say halfway. Those would be your targets. So any breakdown tomorrow, yeah, right about there. So if it breaks out of the yellow box, the hybrid frog tomorrow, we would look for an initial target. I'm going to call right at the VWAP, so about 153, 152 and a half. Then if that breaks, you want to be adding a second position short so that you can play for the 148 and the low of yesterday, or where the VWAP gapped up to. Then if that breaks, then this will really start running fast south. So you'd want a third position at 148 and a fourth position at 144. So I could end up playing that all the way down tomorrow. On the upside, it's really just at not sooner than 2R in hand, so at about 156 is where you'd want to be putting a second position in if it breaks out the upside, because that would be clearly above the previous Z3 and a nice round number. So I would be adding at about 156. So that's what tomorrow's basic trade frame looks like. Then wherever it opens, I would put that yellow box as a bracket and then play the breakout in either direction. So target should be in play tomorrow. And I think it goes up. Clean energy. PBW. This is I talked yesterday about would you want the PSAR dot or the southern skin of the dragon or the Z1. Either one of those basically is a reasonable profit target for these two reentries. I could even support the 2-day low at like 53 and a half. That seems like a reasonable place, especially with today looking like a doji. And I really don't like that it opens near the bottom of the range, pushes out above Z2, and then spends the rest of the day collapsing. That doesn't feel good. And then if you look at the way this thing closed, this move today was all downhill after some early love. And then once it broke below the VWAP in the afternoon, then it looks like a lot of positions unwinding, and it came back and closed the gap all the way to yesterday's close. So that one feels more like the end of a run to me. This is one where having that 2-day low as the swing stop makes an awful lot of sense. because you will have enjoyed this nice long run, and it's pushing Z2 and then couldn't make it and started selling off. I think 53.5 is a perfectly reasonable place to preserve the profits of that leg up. Okay. The other sector we saw yesterday that was amazing was XLY. XLY is kind of in the same boat too. Gap up, fractional new high, but now starts selling off. And so yesterday I talked about having this at the 2-day low. I'd be moving my stop up to the new 2-day low. As a sniper, I'd be at like 140, call it 145. The managerial stop, I would have moved up from the Bollinger Band mean to, I think, bottom of the dragon. So I could see 142 as a stop level, but I wouldn't give back more than that. This is Brazil. Brazil is an automatic short tomorrow because today it had the opportunity to make gains. It did not. It almost immediately started selling off, and it processed all the way through the dragon, came back into the river, and broke the PSAR today. So to me, anything short of 24.72, I'd be, I will be shorting that tomorrow sharply. Treasuries, we were talking about buying the breakout of this box. It did not. It pushed right to the edge. I'm not ready to buy that yet. If I bought this today, I would. This is one of those I would. If I had bought this here, I would on the intraday already be taking that exit, because what I don't want to do is only have this much space, about 50 cents from the close to where that stop would be. And you can see that there are times when treasuries will gap considerably, and I don't want to hold that kind of risk overnight in order to take and then have the chance to make in more than a 1 hour loss. You can see that on the downside, these gaps can be considerable. So this is one where if you had bought the breakout here, then this is one where I would cut the losses intraday and just say, yep, nope, you got me. Conversely, if this holds, then there's still a nice recovery move, about $2 or $3 on the way back up. So if I didn't own this, I'd actually be interested in buying it on a reversal higher. So let's see what kind of move we have tomorrow. If there's more weaknesses in the index, that could make this strong. But if the S&P starts to recover, this is where treasuries could go south. So that's hardly the risk-free rate of return. That's the point I want to make. This is a trading vehicle just like any other one, and the short-term volatility makes it look like a stock, not really the risk-free rate of return. Cisco was slightly better than the S&P. It's still holding on down here, but boy, it's you got to have nerves of steel. It's not officially short until 41, so it's still in limbo here in no man's land. The fact that it failed to fail further today, I guess, you'd have to say is a bit of a positive. But boy, that's pretty thin support. So again, we are getting into a tactical traders market right now. This is one where 2 or 3 days ago, I was more interested in the overnight swing trades on the long side than I am right now. I'm starting to lose my enthusiasm again. Now we're getting into the silly season for the elections, only 70 days away from voting, and it's a toss-up. This is one where I think I'm going to revert back to, 80 to 90% of my effort being intraday tactical day trading only. All right, we'll take a look at some trades the boys made. Here's a nice series from Luke. And he pulled in 7R today. Not bad for a day at the office. I like his write-ups are clear. What I like on the first one was that he played the hybrid frog box, got the entry, and then didn't let it go negative. So nice game. 2 was a quick reversal and cut the losses short. Trade 3, the stop and reverse, and a nice sniper, and then a nicer re-entry, and then the second position, and not a bad managerial exit here. I like the little icon of the manager. So all things considered, pretty good day at work. And what I like is that he's got the wherewithal to already be looking for ways to improve. Nice way to summarize the fireman and monkey, the manager, and then the sniper. So everything was just the managerial exits today, which makes 7R pretty good. Another one from Luke. Here's 2.2R today. So this is a hybrid frog from the swing high. Getting short in here. Tracking his managerial exit. Could this been a little bit sooner? Yeah, the reason I might suggest looking a little earlier, Luke, is the fact that you got that one long spiky move that takes you all the way down to Z3, and then gives you a 1, 2, 3, and now the RL10 has reversed. The managerial exit is really where the SSC entry would be. So it may be that you might have gotten a fractional improvement in one of these 4 or 5 bars prior, using maybe the dragon, the trailing dragon. It's not that much of an improvement, but every little bit helps. So I thought you did a nice job on that. I think this is Griff. So this is IYR, hybrid frog right off the open, right by the numbers. And there's his 3 wrist boxes. The places that you could be looking at second entries. Just some areas to look at and patterns to read. If this was a pure sideways channel, let me just draw this. A pure sideways channel. and we had clearly identified turning points, highs and lows, and you get this sense of a regular, pulse, and then something like a midpoint line. Then the width of this channel is kind of the range that's in play for normal behavior, and now when it gets down to these oversold conditions, the buying pressure comes in, and then it carries it only so far, then the selling pressure comes in. So you get these really well-defined boundaries, and then I can start looking for reversals here and here, and start buying it there and selling it there. So this is the basis of that RLCO patterns. Well, when it's perfectly sideways, like this diagram, there's no directional bias at all. But if you now tilt that bias so that each wave drives it a little bit lower each time, and each recovery is not quite as high. I'm trying to draw there an arrow. When you tilt that down, this is what you end up getting. You get these lower lows consistently, and lower highs. Each one of those rollovers is a confirmation that the trend is still in play. And now these little rebounds, the width of that channel is pretty much the same each time. Only now that downward slope now gives you the channel boundaries that look like this. But it has that regular flow to it, and it gives you an area where you can start expecting things to roll over. And then in this case, so if it had failed to roll over, the break of the Bollinger Band mean now tells you that something different just happened, that all of this price action that was below the Bollinger Band mean may actually be reversing and going up. That's why the Bollinger Band mean is such a nice managerial exit, which is why this exit way down here is so nice and feels very orderly. So we can think of if we drew this a 30-period regression line and has a slope of 0, that means it's pure sideways. The trend is pure sideways. And then there's some downward angle and maybe some upward angle that it gets to. So the maximum positive slope and the minimum, the negative slope, this gives you the almost like a range fan, we would call it, or the spread. And then the further down that slope gets, the worse and worse it gets until it's really pushing the red line way down here. And if it's as steeply down as it has ever been in the last 200 bars, then that tells you that maybe these are key turning points. So what I want to say here then is, once we start picking up this pattern of a high, a low, a lower high, and a lower low, I want you to realize that this feels like collapsing dragon, collapsing dragon, collapsing dragon, and each one of these is accompanied by a PSAR flip. Each little violation of the previous RL10 triggers the PSAR flip, which now makes this a potential short or second or third positions. So it's not until you get that crossing of the Bollinger Band mean, now you have a swing low. This high took out the previous high. So this is now a changing of the guard. Now you have this, find support, and now starts making a new high. Now you're getting this action. Whereas before you were getting lower highs, lower lows, Now suddenly you're getting higher lows and higher highs. Then this becomes where you get a pocket entry short of the emerging dragon. So the emerging dragon is what happens when it takes out the previous hump. These little pocket entries in here are like the supported spring crossing or supported fall crossing, something like that, where it crosses over the dragon and then reverses quickly. Okay, so just be on the lookout, and that's how you can start programming some additional, second and third positions or re-entries. Okay. The other thing to notice on this is that you get a changing of the guard when you notice that RL270 has just been steaming south and heading south and everything's fine. And now suddenly you get this, and now you're on the correct side. Here's that RL270 down here, and now you got everything on this side. Everything on this side, each of those weakening moves has taken it further and further down, and then this is where that transition occurs to. Now everything is north of the RL270 and starting to stretch to the upside. And then if it continues to go up, that's where you'll see that RL270 reverse. And then this becomes the base and starts stretching up. Okay? So nice work on IYR. A disciplined play by Dave here. If we take this as the MMRB from yesterday's idle between the Z3 pinches, and we bring that over in here, that's probably the size of it right there. This gives you a hybrid frog. Here's a sniper. Here's the managerial. I like this one as the short because you're playing really back to this target just to close the gap. And if you're only risking this much, you've clearly got 1-2 moves to the downside. So that is an excellent short. I really like the management skills in here. It never fell to the bottom. And after 1, 2, and starting a third one, and it came back, that feels like a pretty good place to get out. This may have been an opportunity right here with the PSAR flip, and after this sell-off, to try and get maybe an SSC here. It wouldn't have paid off. You probably would have scratched or taken a sniper exit for a fraction right there. But I thought this was good risk control. You gave it a chance to pay off. It didn't, and you preserved your capital. I thought that was nice. XLK will just break our heart today. I'm going to assume that this region in here is about what we'd have seen as the MMRB the day before, which now makes this gap up opening a nice collapsing dragon or a hybrid frog by that time. And you'd probably take that as a sniper exit. And so this would be a gain. And then this becomes probably your SSC. You won't lose money on that trade, even if you took the sniper or the managerial exit. That acts as a really nice one. There's that nice sideways quiet channel. I love the breakout. One of the things, if you get like 20 bars, Dave, you get 20 bars. This is where maybe the Z2, instead of waiting for the full Z3, you might be able to improve this entry just slightly by taking the Z2 entry, especially after you're about 10 bars in on the PSAR flip already. The sooner you're and you get, it's turned into summer right there anyway, and it had 30 bars to fail and it didn't, and this is XLK, which is a tech leader today. I don't mind this taking a fractional win. I would love to see this re-entry on the PSAR reversal. You won't lose money on that trade. You probably end up getting this and give back that last little piece. But I thought this trade as framed it worked fine. Very good risk control. There's just more things to be able to see on the short side and then on the long side. The size of this move is what creates the rebound. So that's about as symmetrical as you can get right there. And the size of the downward move is the size of the upward move. Yeah, Griff asks, on collapsing dragons, do you take it when the price goes below or wait for the RL10? It's when the price goes. And the reason for that is, if you had the RL10 was down like this and it rolled over and it's starting to drift down, and so the collapsing dragon, like if I'm using the RL10, let me draw it that way. If I'm using the RL10 as the belly, and I draw this right here, my experience has been that when price starts drifting down here, when this breaks, you get an immediate downward move, and the RL10 will be slow. So if you wait for the RL10, you may not get an entry until down here, because price will already be down here while RL10 is just breaking through. So when you set up this pocket right here, and there's your collapsing dragon, as soon as price breaks through that, you got to be on it, and you got to be short right there on price. One of the things to watch for then is this may end up being a supported fall crossing or even a winter crossing. So what you're doing on that is you are getting short inside the pocket. You're not waiting for it to violate here. You're getting it in this hesitation space. So you're front running it a little bit, but the good news is that your execution risk is even smaller. Instead of waiting for this and having an execution stop like that, if you can short it here, then your execution risk is only this, because you're already short from here. So the amount that you pay when you're wrong is small. So that's one of the advantages of front running. And I tried to do that. And even if you took half a position in here, and then the other half when it confirmed, you'd get an average price that was better than the collapsing dragon and less risk in case the first entry is wrong. DIA gave the same that same possibility for that hybrid frog move to the upside. Again, good risk control in there by Dave. I like that. Okay, this is from Griff. And on DIA, I like, if you were playing the frog box, maybe you call that an error. To me, that looks just like a straightforward supported spring crossing, though. And that's one of the upsides of supported spring crossing when it works. To be honest, when it works, is that this entry allows you a very tight risk box, whereas if you waited for the full frog box, you might have had to have gotten in here, and then that winning trade, instead of being plus 0.75, ends up losing 0.3. This is the example. This is a pretty good example of that collapsing dragon. Notice that if you waited for the RL10 to cross right here, price is already down here. Whereas if you got short here when price crossed below this moment, you've got this much risk and you're short from right here instead of being short from right there, which now gives you almost 2 execution R in hand. If this is your execution risk, there's your 2 gain boxes. But if you got short here, then you only got 1 execution risk because your risk box is that much bigger. So getting short early in this little pocket is nice. The good news on that is that this price it's crossing the RL270. It's already 2 standard deviations below, so this breakdown, it's already leaving the floodplain, and you're that close to a Z3 breakdown. So in my view, either one of these is a potential short. Any one of those 3, short, or short. This one I really think should be here, because you have the RL10 low, another low, another low, and the PSAR is flipping. This is where, if you took a look at the trailing PSAR, you might get this entry instead of this entry. And then that would double that return. This is a great exit. Here's a Z1 breakdown. And I really want you to get that trade. Notice how symmetrical this whole move is. And then notice that it only took 10 bars to fail that distance, whereas it took 30 bars to gain that height. So this happened in 1 unit at a time, and this took 3 units at a time. So this happens 3 times faster. And he's working hard on the SSC, which is respectable. But I want you to start noticing, again, whoops, there's a pocket, here's a collapsing dragon, there's a second entry, here's a supported, because now here's our winter, there's our supported spring, and you'd end up exiting somewhere in here. This is actually a stop and reverse when it crosses the Bollinger Band mean. Here's a collapsing dragon. There's a supported spring perfectly played. You could probably convince me to take that because you have a low, a higher low, PSAR flip, nice tight box, reversal at its own VWAP, and also a reversal after that little spike gets above the Z3, crosses the Bollinger Band mean, Z1, Z2, Z3. Somewhere in there is a short with a cover. This is a good effort. On this one, it rolled over so fast, it wouldn't offend me if you took the exit here and took a small loss. But I like the discipline. That's fine. And then this could be here instead of here. That's a good managerial exit. And there's our CD. Collapsing dragon. Notice how decisive all of those sell-offs are. When this thing collapses, dude, it collapses. It climbs up the steps, jumps out the window. climbs up the steps, jumps out the window. That's the pattern. Okay, that's DIA. That's the broad market. Collapsing dragon turned to winter, second position, because all it did was fell into here. It never even rebounded much. It just rolled over again in a collapse. Couldn't even get to the Bollinger Band mean. Rolled over, bang, right there. Or here, that's a collapsing dragon. This is the pocket. So I like that short. I like the PSAR short or the full collapsing dragon, and you won't lose money on that trade. After this excursion, you probably end up with an exit somewhere in here. Here's our supported spring. Here's the Wu Wei exit. This is still pretty good. I mean, I like this. That's nice. And then lock it in till the PSAR picks it up and probably exit here. Now notice if you take this all the way to let this come all the way over to the Bollinger Band mean and let that pick up. This might get you out. That should get you back in, and you still have a nice second leg trade here. This is Griff. This is good trading practice. When you're marking up the trades that you take, you should also be looking for the patterns that you now see that maybe you weren't looking for or that you were explicitly not trading. So he's done a nice job here of looking for, I think your SSC is right here, not here, because you have a low, a higher low. Now when this takes this out, I think that's an emerging dragon. This is a SSC here. This is probably an ED right there. That's nice because this whole sideways quiet channel was negated by this upward move. If this got you out, that should get you back in. And then the Wu Wei exit stays in till right about here, picks up the Bollinger Band mean, and then probably exits here. And your sniper may have gotten you out here. This is a potential. You don't take it because it's so late in the day. But if this had been like noon, like if this is something I'd seen at noon, I'd probably be shorting this because you have a measured distance down to the VWAP. And last one here, this really nice work. Good risk control, perfect stop and reverse, and that pays. That's the trade of the day. We also want to see this as Z3 pinch coming out of the lunch. And the size of this leg down is the size of this leg up. This might have gotten you in, but it's already almost getting a little late in the day because you have a low high or low, and a PSAR flip. So nice work, guys. Keep up the fire. So I just want to review the bidding on the that Wu Wei exit. So the this flashcard is on Patreon. So we have that that harsh winter. We have the RL10 bottoms out, reverses across the baby dragon, which is the early alert that winter's about ready to become spring, that it's going to cross the dragon, and that the PSAR is going to flip. This idea right here is simply taking the PSAR -1 trailing stop and takes an entry here. So if this was a sharp reversal to the upside, and price started taking off and going, well, when it broke through this previous PSAR, you'd get the entry here instead of waiting for this bar to close and then entering probably over here. All right. So what we do then is when we see that PSAR level, our stop is either going to be here where the RL10 bottomed, like if the PSAR hadn't flipped yet, and we get this entry, we know the PSAR dot's going to flip and get placed right at the belly of the RL10. So this stop stays in place while the PSAR is moving north until it gets, I like to just think of, 1, 2, 3. Then when this closes, by that time, you can move your stop up here, and then you just keep that in place until the Bollinger Band mean, which by that will have bottomed out, is coming up. And then as soon as the Bollinger Band mean takes out your PSAR stop, you then pick up with the Bollinger Band mean as the managerial exit, right, on half the position. And then maybe you have you might pick a sniper exit to accelerate, based on you decided that you want to preserve more and you have an intuition that, hey, this is the time I want to maintain it. So this gives you sort of that simplified template for the Wu Wei exit with the optional trailing PSAR entry here, and then the key decision points of what we're trying to achieve. Okay. I want to say a little bit about this one. Bill Scheit sent us a nice reminder of an essay of what it means to feel professional. So this is a conversation that I have with my officers, because they're in a position where they're wanting to get another 10 years of service, but they're starting to think already about their life after the service. So I talk about the 10,000 hour rule. Comes from the work of Anders Ericsson, and says basically to really develop recognizable skill, that'll get you paid takes about 10,000 hours. Well, 10,000 hours in one way of looking at it is 5 years at 2,000 hours. 2,000 hours a year is working 50 weeks and 40 hours a week. That's a full-time job. That's 1 man year that gets you 2,000 hours. That's the equivalent of a full-time job, 8 hours of actual effort. So what the world will pay you for is specialized knowledge, right? This is what the world will pay you for down here. What the world will pay you for. The first thing is it'll pay you for integrity, that you're trustworthy. And the good news is you get to decide how much of that you have. The world will also pay you for leadership and management ability, which is nothing more than I can get a job completed to standard, on time, under budget, and make my team better as a result of how we were doing, of how we solved the problem. If I can do that, I'll get a bigger team and more challenging problems and more resources. I'll answer your question in a minute, Chris. So what's key on this is that this specialized domain knowledge is what you need the equivalent of, basically, the equivalent of a master's degree of study in terms of, which is about 3 years worth of work on theory with coached feedback, peer learning, practical applications, and you've actually put in the effort to craft the knowledge that you've internalized, plus about 5 years of experience of putting it into practice under the supervision of somebody who's already in the profession. That's the typical model of craft knowledge that you see with accountants, certified financial planners, strategists, Lean Six Sigma black belts, and all that jazz. So it's not just the schoolwork and the theory, but it's also applied work under guidance. Medical profession, accounting does all this. And remember that the 5 years of experience is not just 1 year times 5. It's actually a skill and challenge progression through 5 years of increasing responsibility and challenges and performance. And then in those 5 years of experience, you're not just doing stuff, but you're focusing on performance and updating your goals, and you're being coached and mentored, and you're putting in the effort to get better. So all of those things, the equivalent of a master's degree plus 5 years of experience, that's what the world in general is going to look for in terms of domain knowledge. So I'm always a little skeptical of the, hey, we can teach you in 20 minutes. I mean, I'm trying to do that with the kata, but that also is a kata that rests on a large glacier full of good ideas and supporting theory and practice, so that it can be adaptive. And so to be able to get through that much effort takes endurance, resilience, delayed gratification, coachability, and commitment. You've got to have that relentless, continuous improvement so that your 5 years of experience is not just 5 years of attendance, but it's actually focused performance, and that you're using evidence-based improvement, right? So all of those things go into the 10,000 hour rule. So I always just wonder, is the 10,000 hour rule simply a function that because our traditional learning methods are so poor, you have to blunder around for 5 years? Maybe if we can apply the principles of accelerated learning, we can make a dramatic difference in how fast we can acquire those skills. That's the argument behind paying attention to your learning technology and your learning infrastructure and finding those things that will accelerate the mastery of the knowledge. And at the end of the day, what it takes to be successful on the soccer field or the wrestling mat or in the trading pit, you've got to have skills that are related to the game, to the domain. You got to be able to play the game. And you have to have the will, the emotional fortitude to keep going through those 5 years of suffering, but also in the cut and thrust of the game, you got to have the will to fight. And you have to have an experience-based and then an awareness of the current situation outside yourself so you know which of your experiences and skills to bring to the fight. So you've got to have that kind of situational awareness so that you're choosing the right strategy. The experience to know which strategies work for you and what the patterns look like. The will to put it into action, and then just the basic skills and framing. So in my judgment, you're as good as the worst one of those four. So if you got 3 out of the 4 really good, but one of them is poor, then that's probably how good you are. So when you see me going on and on about learning theories and Cornell note sheets and the writing process and after action reviews and continuous improvement, the whole idea is I'm trying to reduce the length of that learning curve to get more juice per squeeze. That maybe we can do that in 2 years or 1 year through the principles of accelerated learning. Okay? That's what I wanted to say about that. And coaching is such a huge thing in the world of business that you can't throw a dead cat in a room and not hit somebody that wants to coach you. And this is why people are getting coaches, to help with high potential and facilitate transitions, because those are so tricky. To give critical thinking and triangulation, and then really specifically, to a lesser extent, looking to eliminate bad habits. Who starts the coaching relationship? So this would be the company putting together a package, the person themselves, a coach, maybe, and this is normally like an internal coaching where you could look around and see somebody who you think would be a high payoff. If they responded to coaching, they could really become amazing. So it's sort of a talent management thing. And almost all of the coaching that's being done is being done with initially hired for professional reasons, but then there ends up being some kind of personal element to it that is bleeding over into the structure. So the whole person concept is really kind of what's key. And then there's a mixed bag about, does there need to be a certification, and should they be trained in psychology? To a minor group, it really matters a lot. So there's a world of informal coaching that can be done without specialized training, I suppose. I am taking both of the certifications and the psych training because I do think that stuff is important, and I want to do no harm. And these are not just one-off sessions. I mean, there's a sort of an enduring level of commitment, a practical application year, like an intern year or something like that. Right? So, coaching and the psychology, that's sort of the reason I do it, is because I think that's all part of the accelerated learning effort that we're going through. Okay, so that's everything I wanted to cover tonight. I'll get this published and posted. Oh, I owed Griff an answer to that. So the question was, is the Wu-Wei exit applicable while the trade is working? Yes, that's what my exit strategy now looks like. Because if the price turns around right after entry and heads south, yeah, I would stop and reverse, because what you got is a CD. So especially in the case of the supported spring crossing, let's go take a look at that again. Yeah, I mentioned before that one of the reasons that I don't mind if this thing fails is that if it were to fail immediately, that's your collapsing dragon, because now whatever this big leg down was, whatever caused this leg to go down, you're going to get another one of those starting here. So a failure to achieve, like in this case, so if we got this entry, why is that giving me grief? So if there was some price improvement in here and it was enough to then give us gains, with an entry, so if we got this entry, and our risk box was this, and then this thing immediately started to fail on us right after the entry. Oh, excuse me. So if this thing started to fail immediately, so we took our entry here, and instead of going up, it just rolled over. If it hit our PSAR stop down here, then that is the preferred collapsing dragon, and we plan for that thing to be the second leg. We think would be the size of the first leg, and then we're off and running. Okay. All right, that's everything I got, guys.